What's going on, guys? Welcome back to another episode. I'm your host, Ryan Richards, a residential loan officer and real estate investor based out of Massachusetts and Eastern Rhode Island. Today I'm bringing another solo episode, taking you behind the scenes on what it's like to be a loan officer. What does their job entail? What are they responsible for? What makes a good loan officer versus a bad loan officer? If you've ever wondered if it's a career for you, this episode is definitely one you don't want to miss. I'm excited to bring this topic to you all today. It's one I've actually thought about doing before, but I'm surprised I haven't. What's it like to be a loan officer? And what makes a good one, what makes a bad one, and what can you expect if you were to go into the career? So one of the things I like most about being a loan officer is that you control your schedule for the most part, and you control your income for the most part, which those two things for me in a career were non-negotiables. I wanted to be able to do what I want to do when I want to do it, and I want to have unlimited earning potential. But a loan officer's job is really focused on building relationships. So a lot of what we do is customer service across multiple different channels. So we're servicing, of course, our customer, our client, the borrower. We're making sure we service our referral partners, our agents, our realtors, and potentially our attorneys, financial advisors, commercial lenders, wherever we're generating business from. We want to make sure our business partners are happy. And we're also servicing all of our company, right? We want to make sure that as a loan officer, we're interacting positively with our teams, our company operations. That's certainly a service component. We want to make sure that the people we're working with appreciate and want to work hard for us. So there's multiple different channels that you have to build strong relationships with and communicate with often. If you don't like to be on the phone, you certainly would not make a good loan officer. I'd say 60% of my day, and probably literally, is spent on the phone. So I probably make 50 to 60 phone calls a day, if not more, talking to various different people. Might be specific to a transaction, might be about potential future transactions or marketing ideas, could be anything of the like. But there's definitely a lot of phone time that's oriented towards the position, and a lot of building relationships, talking with people, meeting new people, and building your customer and client database. The other side of that coin, so a lot of it's conversations, a lot of it's building your business, a lot of it's marketing. But the other side that's obviously most important for your role is, as an originator, your job is to make sure someone is able to get financing. So that means you're reviewing pay stubs, you're reviewing bank statements, tax returns, credit reports, and you're referencing program guidelines. So one thing a lot of people probably don't realize from the consumer standpoint is there's so many different nuances to each situation. There might be, at some times, there might be 6 or 7 different program guidelines I'm referencing as I'm pre-approving someone. And within those, these are thousands of pages, these documents. So you need to be able to be thorough and have a strong attention to detail to make sure you don't miss something, because sometimes the smallest little thing comes up to be a big problem. So you have to make sure you're vigilant all of the time. So a lot of time is spent at the desk, making sure you're reviewing these pay stubs accurately, you're referencing the guidelines, reviewing bank statements, credit reports, and having conversations with the borrower, your client, about their profile. There's a lot of times you want to make sure you're getting ahead of things before it's too late. So for example, I noticed you have $10,000 in your bank account. You said you're getting 10 more. Where is it coming from? So conversations like that sometimes don't happen, and loan officers assume the best, which everyone knows what they say about assuming. That can sometimes come to bite you later. And unfortunately, that's your reputation. That's your commitment to your client, is that when you give a pre-approval letter, you're committing your confidence. I've done my homework, I've done my due diligence, I know the guidelines, you're going to get financing. And unfortunately, a lot of loan officers don't take that responsibility as seriously as I think they should. Or they just overlook things. They might not be knowledgeable. Knowledge in the loan origination space comes from experience, not tenure. experience. So how many transactions are you doing every year? How many loans do you close every year? These are types of questions you should ask your loan officer. How many transactions did you do last year? If you're a 10-year loan officer, it doesn't really mean much because guidelines change all the time. That's another piece that's really important. Your loan officer needs to be attentive to the guidelines. You're always referencing guideline changes, guideline updates. They change monthly, sometimes even weekly, all the time across many different programs. So as a loan officer, your job is not only to service the client, not only to service your business partners, not only to promote yourself, review numbers with your clients, structure financing options, but you also have to make sure you're doing the real meat of your job, which is making sure when you give someone a pre-approval letter, that pre-approval letter means something. That means this person's going to get financing. The letter itself doesn't really mean anything. It's a piece of paper. It's what due diligence was put behind that to back a solid and bankable pre-approval letter, which means this client's going to get financing. So it's all of those things together, which is for some people not really attractive. And I could understand how some people wouldn't want to be a loan officer. There's a lot that goes into it, and you're always on call. That's one other piece that's really important. The good loan officers are always available. Some of my clients call me at 8 p.m. on a Friday night, 9 o'clock on Sunday afternoon, 6 a.m. in the morning. You have to always be available for your clients, for your business partners, because sometimes time is money. An offer deadline might be at 9 p.m. tonight. So if there's a question about the financing at 8 o'clock, I'm going to make sure I'm available for my client. So you're always at the whim of clients, business partners, and that's really how real estate works in general, especially on the residential or small deal volume side. We're always on call, it's fast moving. There's a lot of things that happen quickly. We need answers quickly, we need guidance quickly, but we also need confidence. And confidence comes from knowing the guidelines, understanding the programs, being thorough with the loan application, and communicating that you've done your homework, communicating the options to the client, breaking down the numbers, and making sure they understand the financing structure. So a typical day for me entails all of that. There might be some days where I'm doing some marketing throughout the day. I could be on the phone while I'm answering emails. I could be shooting a podcast like I am today, answering emails in between episodes, answering phone calls, scheduling meetings, dealing with files that are actively in the system, heading towards closing, new pre-approvals, new prospects, client consultations, hosting events, networking opportunities. All of this happens all at once, all the time. So you have to be someone who can manage multiple tasks at the same time. One thing I think that's very under-recognized for a loan originator is you have to be good at marketing. So leads don't just come to you. You have to go out and promote your own business. So when I first started in the business, first 6 months, I didn't have a single closed loan. My first closed loan was like a day after my 6-month mark, because there's no leads that come to you. You don't just get your loan officer license and start working on loans unless you go and work for like a bank or a credit union. That's typically an entirely different structure than a loan officer who is working for a mortgage company. We're a lot different. Banks, credit unions provide a service to their customers just to do the loan. We are full-fledged, all in on mortgages. That's all we do. If you're in a role like that, which would be everything I just described, you have to market yourself all the time and across multiple different channels to actually get business. So hopefully you found this conversation helpful. There's a lot more we could talk about today, but I wanted to make sure that people who had aspirations to be a loan officer had a little bit more clarity on exactly what happens behind the scenes. And if you are looking for a loan officer, that you pick someone who is available to you, who explains things to you, and always has your best interests at heart, making sure that they do the validation for all of your documents. If you get a pre-approval and they don't ask you for a pay stub, that should feel wrong. Yes, it was easy. People love easy. But you want to know that as you go out and look for houses, as you spend your time researching properties, that the viability of your financing is rock solid. So make sure your loan officer asks for the right documents, asks the right questions, talks you through your financial profile, reviews your application, your credit report with you, so that you have confidence you can close when you find your house. As always, more than happy to chat with anyone who's interested about joining the industry. Our team is hiring, so we'd love to talk to anyone who's interested about joining as a loan officer in the future. Stay tuned for more episodes to come. Enjoy the day.